Good evening, students. Welcome to the live coaching classes organized by Board of Studies ICA. Today's class, we are going to learn on this topic called Valuation under Customs Act. Valuation under Customs Act 1962. Please keep in mind, this topic is very important from examination point of view, where a problem minimum for 4 marks, maximum for 6 marks would be tested in your examination. So without touching upon valuation, generally questions will not be framed in your final examination, right? Before we commence with our today's discussion, people are listening to me, please confirm you're able to hear my voice, audio, also you're able to see my presentation. Once I have confirmation from some of you, I'll start with our today's discussion. And meanwhile, students, today's session, the PPT has been hosted by ICA Board of Studies. Along with the PPT, I have given an Excel file for practicing the problems in relation to today's class. So let me have a confirmation from some of you, then we can go ahead with our today's discussion. Please download the Excel file along with the presentation PPT. That will help all of you for practicing the problem. And people are listening to me, please your handbook, that's the running notes, along with that your institute material also side by side, so that you can carefully follow the today's discussion. Thanks for the confirmation, Raman. Let's start for today. So I'll make you to learn a couple of import-export terminology, which is called as INCO, INCO terms. So I have taken few definitions which are connected with your INCO terms. Have your institute material handy with you. We will also go through a couple of definitions. Then factors which influence the value. I'll give you a couple of examples to make you understand why is that this topic called valuation important and what factors are going to be determinantal for payment of customs duty. For imports and exports, I'll make you run through the valuation rules, which will aid the proper officer for determination of customs duty. In the process, I'll take you through the problems to practice the learnings what we had in the previous session, that is types of duty, where we had social welfare cess, we had tariff value, ad valorem value, all those calculations we will also run through parallelly. And any doubts in relation to previous class, etc., feel free to post it in today's session. Before that, I'll just take you through my Excel file to give you a backdrop. What reasons we have to study this particular topic called valuation under customs law. Factors impacting valuation. Now, why is that we need to study today's topic? What problems are going to be tested in your examination? I'll give you a basic overview. First important factor, where price is not the sole consideration. Now, for a moment, if the seller and buyer have got into understanding, maybe a related party, may not be a related party, where the contract for supply, or rather the price consideration, has been deferred. Some portion you can pay now, some portion at a later point in time. So if there is a contract where the complete price is not factored at the time of supply, then there are certain aspects called free supplies by the buyer. Now, there could be a scenario where obligation of the supplier has been met with the buyer. For a moment, let's assume that there is a mold which is required for manufacture. Say I have a requirement to manufacture a laptop case to be supplied in India. I wanted to get this laptop case manufactured. Say I have my supplier in Japan. What I'll say to my manufacturer, look, I'll supply the mold to you. Mold will be maybe say 10% of the production cost. I'll say that this mold, along with that, there is some design related expenses. This design related expense also, I as a buyer, I enter into a contract to pay on behalf of the seller. That could be a scenario where my price is understated from the seller's point of view. Third, there could be a related party transaction. Whenever we talk about a related party transaction, be it our income tax, be it our indirect taxation, there is a impact of underpricing. There is an impact of underpricing. So there is a price which is always underdetermined because of your related party transaction. We call technically as a influence. We call this as a influence. That means to say the buyer is in a position to influence the seller for undermining the particular supply value. Last but not the least, there are say tri-party arrangements where the price is not able to be determined upfront. Like say A supplies to B, B supplies to C. A and B have an agreement for a particular price. B supplies to C at some other price. Now, whenever there is a contractual obligation for B to pay back to A, similarly C to pay back to B, where the price is not the sole consideration, or there is a future determinable factor which is going to impact my pricing. So these are certain factors where the revenue to government of India is going to get affected. So when this revenue is affected, this may have an impact on domestic market. That means the manufacturer or producer in DTA is going to have impact of this provisions what we have read in the previous class. Maybe subsidies article coming into India, or there could be an anti-dumping which happens to a particular product, or there could be some sort of this glut of products, cheap products, which are coming into India. These are all the factors. If not addressed in timely manner, this is going to affect my revenue. So these are the reasons where my valuation under section 14, 14.1, 14.2. These two are determined with reference to value rules. You have rules for exports and imports. Today's class, we are going to discuss on various rules. Along with that, how the value is derived. This also we will try to understand. Clear? So this is a preamble. This is a preamble why we have to study today's topic called valuation under customs law. Now, to start with, first definition, bill of lading. Please have your institute material handy with you. In the institute material, you have topic 3, terms used in commercial parlance. Terms used in commercial parlance. In that first definition for today's discussion, I have picked up there is a message from Kaushiki. Nisarg, I think you are able to hear me. One of student is mentioning that there is a problem with Board of Studies line. She says that there is an error. App or YouTube, please. She mentions that this application is not working. So Nisarg, can you check with this student? She has mentioned a contact number. I think Kaushiki have mentioned even in the previous class. Let me explain. Nisarg, can you hear me? Other students who are watching me live, please can you confirm? Are you able to hear my audio? I don't know whether it's a technical issue only for one student or all the students. Let me have a confirmation, then I'll go further. Students, give me a minute. Let me check with the technical team. Kaushika, I got your message, ma. I'm just interacting with the technical team. Students, please excuse me. I'm sending the message to the technical team. Okay. Meanwhile, Kaushiki, you're able to watch the session on YouTube Live, ma? Is the audio clear enough, Kaushiki? Great. Thanks for the confirmation. Kaushik, I have passed on your details to our technical team. What I will do, I'll continue with my today's session. Meanwhile, yeah. Thanks for the confirmation, Kaushik. Other students, if you have any technical issues, please let me know. So to start with, bill of lading. Bill of lading is a negotiable instrument which is given by the carrier. This no, you have this vessel, aircraft, etc. So this vessel or aircraft, we call them as a carrier. So this in charge of ship or the aircraft gives this particular document, which is called as a bill of lading. And this document will have port of shipment, from where the consignment is going to move and what is the number of packages. So they're going to give the basic identification, what are the marks of this particular consignment, what is the vessel in which these goods are being carried, and from where these goods have been dispatched to which place. So starting point, ending point, those details will be available. And also information whether the freight has been already paid or freight is yet to be paid at the destination. And this is a document, as I say, the importer generally he surrenders this negotiable document to get the goods concerned cleared from the customs port. So whenever this vessel or aircraft lands in the destination, the agent of the importer goes to this particular custom station. He surrenders this particular negotiable instrument to get something called delivery order. So precisely, a delivery order is a document where I give the authority for this particular carrier to get the consignment delivered to my particular agent. So both these definitions, delivery order and bill of lading, expect 1 mark theory question in your examination. In addition, you have something called boat or lighterage charges. Little technical. Now, generally, whenever this vessel doesn't get the space for parking, the craft doesn't get the enough sufficient place at the berth. So what they do, they generally arrange this smaller boats to transship the goods from one place to another place. That's called boat or lighterage charges. So when the goods are transported from a ship nearby the seashore, the smaller boats or lighter is called as boat or lighterage charges. These are the charges for moving the consignment from one place to another place. We also call it that the transshipment from main boat to the smaller boats. Now, these examples, like why we have to study today's topic. First and foremost, I have a contract for supply where consideration is not completely established, or consideration has been influenced by the terms of supply. Most of you may not appreciate this particular learning at this point in time. When you get qualified, when you do this vetting of contracts, that means to say, when you interact with the vendor, when you also discuss with the banker. I'll give a practical example to make you understand. Whenever a foreign remittance needs to be done, we generally give an instruction to banker saying that, look, this is the imports or this is the purchases we have done. In relation to this particular import, I need to make the payment. Then the banker will ask, please give me the document and also give an undertaking that this is the price or consideration you're going to pay, and there is no future consideration determined to this particular supply. So here they're trying to make a clarity that when you make remittances, there are compliances as per PEMA regulations, where you have to take a prior permission of RBI, or it is an automatic route where you need not take any prior permission of RBI. So these set of regulations indicate to you whether the price is a complete amount paid, or is there any future amount which is payable determinable. Example, say royalty. When I have purchased goods and supplied the goods in India, every good, every particular commodity I sell, maybe it's a 3% or 4% of the sales price I pay back to the parent company as something called royalty. The royalty is as per the contracts of your master service agreement or maybe the global agreement. Now, what is happening here? My consideration at the time of import is partially complete. At the future point in time, whenever the sale happens, I'm going to pay back to the supplier something called royalty. That means consideration is linked up to a future event. That could be a scenario where I'm referring that consideration can't be established. Now here, there is a reference to a future event. Or probably there could be some uncertain quantification, where the supplier and buyer have some arbitrary way of fixing the pricing. That could be the reason where I have to refer to valuation provisions. Then existence of position which influences the price. Position either at a buyer, seller or buyer. Either of these places, there is a related party transaction. Probably barter system. If you remember the definition under section 7 of GST law, even barter is to be called as a supply. Some of the commercial terms, please refer to your institute material. Table number 4 in your institute material, they are given some Incoterms, technical terms relating to value in the course of import or export. They call this as a Incoterms, INCO. Incoterms. These are the international commercial terms. Free on board. Then we have free alongside, cost, insurance, freight. Examination. Most of the cases, either this will be given, free of board will be given, CAF will be given. The other technical terms, just for your reference purpose, but examination, either they'll give you FOB or CAF. This is very important because in problem solving, starting point, whenever you start your problem on valuation, starting point, you have to see whether the value which was given, is it CAF price or FOB value. Please understand, this is going to be a step 1 for solving any problem in your examination. Then, obligation of the supplier duly met by the importer. This I have explained, where there are free supplies which is going to impact your supply value. These are the reasons why we have to study my valuation provisions. Mansa is asking this question: what is the relevance of Garden Mill's judgment now as we have section 15 to resolve queries? This was prior to that judgment, Mansa. Section 15 has completely put an end to this Garden Mills case. Prior to that, we had that particular issue into consideration. This section 15, Mansa, similarly, I'll take you through. If you refer to your institute material, there is a heading called conversion dates, where they have referred to section 46, section 50. Just give me another 10 minutes, Mansa. I'll give you a little more clarity how we will use knowledge of this section 15, Mansa. But as you rightly said, this Supreme Court judgment in case of Garden Mills case has been come to an end after the amendment made to Section 15 provisions. Now, why we have to, in the process of referring to my Section 14, the provisions say that whenever you refer to the provisions under Customs Act, the value of imports or the value of exports, we generally refer to a term called transaction value. Transaction value. This transaction value is nothing but the money, the price, which is actually paid, or this is yet to be payable. This is yet to be payable, not yet paid. When sold for export out of India, export to India, or for delivery at the time and place of importation. For export from India, for delivery at the time and place of exportation. So here, in general, in simple, whenever we talk about a value, they are saying that as per provisions in Section 14, what we refer to something called transaction value. Determination of transaction value is something which is important under customs. In the process of this transaction value, they say, I accept your transaction value when buyer and seller are not related. Buyer and seller are not related. So what happens if buyer and seller are related? So you cannot avoid this scenario. You cannot avoid this scenario. Then they say, in case if you are not able to avoid this, price should be the sole consideration. Price is the sole consideration for the sale. So wherever you have a transaction, where there is a transaction value between buyer and seller, please ensure that there is no related party transaction. Now, most of the cases, 80% of your MNCs, they have invariably related party transactions. In those cases, they say, let the price alone be the sole consideration. If you refer to your international transaction, that transfer pricing, they also refer to various modes for determining the value in case of your related party transactions. So they say, let there be a arm's length transaction, arm's length price for that particular supply. Clear? And subject to other conditions, Now, this other conditions is the place where the rules come into picture. Now, so when does the rules come into picture? Let's take a couple of examples to understand. You can make a note. Rules, why we refer? 1, price, not the sole consideration. Price is not sole consideration. Or there could be instances where free supplies where no price is available. There could be free supplies where no price is available. Now, these could be the couple of examples where I'll be forced to set aside my transaction value, and from here I'll travel to my valuation rules to come back and say what is my transaction. Yeah, this is the basis for me to determine the value for payment of duty. Now, Section 14 says that whenever you talk of import, now for a moment, please forget all your learning. Imagine you are sitting in the shoes of a proper officer. Now, when you happen to be a proper officer under customs law, for a moment, a person comes to you and says that, my dear officer, this is the consignment I have imported from Germany. On this particular consignment, this is the value, the way my supplier has given me a tax invoice. On this, I'm going to pay my customs duty. So here we need to understand how value will be ascertained. This is first question. Second question, the transaction in foreign currency. This transaction in foreign currency has to be converted into INR. This transaction in foreign currency has to be converted into INR. Also, there could be some facts or information available from where probably the contract to supply, the contract or agreement. This importer has given you a tax invoice. He also has given a contract under which these goods are being imported. Please close your eyes and imagine this transaction. Now, what you will test? Okay, this gentleman has come for clearance of goods. Whether what all money he has to pay has he factored into the supply? The first question you will ask is, whatever invoice value is given, does it consist all the elements of cost incurred by the buyer till the port of clearance? That means to say, I have given an example, seller is in Germany. So from Germany, when the goods is coming to, say for a moment in India, this importer has come to the Mumbai airport or Mumbai customs, this sea customs. When the importer has come, all the cost of material, freight from the exporter place till the place of importation, insurance, and any expenses to be incurred by the seller in case if incurred by the buyer. These are all practical questions you'll ask before you determine what is the value. Once you determine value, just a while ago, Mansa was referring to this garden silk mills case, where what is the value, what is the conversion rate I have to adopt. Now, on the day when he has filed bill of entry, there was one rate of customs duty. On the day when the ship has come to the customs port, this customs place, when it crossed customs barrier, there was one rate of duty. What I have to do? Different customs rates are available. So all these are the questions which we have to answer, right? So for that, I'll take you through one example which is there in today's Excel file. Let me just see whether you have seen. Students, hope you have received this Excel file. Students, please confirm. Hope you are able to see my Excel file and hope you have received this Excel file. Okay. Thanks, Raman, for the confirmation. Let us start with the problem. Now, this is very simple problem I have taken for understanding purpose. This, I'll just put it in a different color so that I'll explain you when I come to rule 10. Value of machinery at factory gate of supplier. Now, the question is compute the value of customs under section 14 of custom tag. So they have given various information. Based on this information, we are asked to calculate what is the value under section 14 of Customs Act. So point number 1, I'll put the heading and also put remarks. Point number 1, value of machinery at the factory gate of supplier, 22,500 US dollar. So I would say this is relevant information. This is my relevant information. Cost of packing material. For taking the payment of customs duty in India, this is also relevant information. Third item, design charges for the plant in India to be paid by the importer in India. This is $400. Now what they're saying, there is a design charges for the plant. Now, most of the cases, it so happen that when the machinery comes for installation, they need to have the civil work done for the erection and installation of the machinery. Now, is this expenses prior or till the port of import? Answer is, this is post-import into India. So when the activity is happening post my import, this is irrelevant for me for my cost. I'll say irrelevant. Why is it irrelevant? This is post-import into India. After importing, I have to incur these expenses back in my factory. Then next point, handling charges and transport charges up to the port of exportation. So from the overseas till the customs port India, what all expenses I have incurred, I have to factor those expenses. Accordingly, even this is relevant for the consignment to come into India. Freight charges up to the place of importation. Even the freight charges from the port of export till the port of import is relevant for me. I'll say relevant. Purchase commission paid by the importer. Purchase commission paid by the importer. On the left-hand side, I have written something called Rule 10 excludes buying commission. Please park this buying commission somewhere in your working notes. When I come to Rule 10, I'll explain in detail what do you mean by this buying commission. For a moment, this commission, what I'm paying is not a buying commission. I'll say not a buying commission. Now, if you ask me, sir, what is a buying commission? Answer for that question. Generally, when the goods have to be imported into India, I'll give a live example. I'll give a practical example where we use this buying commission. Now, there is some concept called just in time. Hope most of you have heard this concept called just in time. Now, where we use this just in time as on today, all OEM supplies, we have this just in time fundamental where my customer gives me a requirement every day morning saying that today you have to supply these goods. For a moment, Honda, TVS, Toyota, all these manufacturers, they'll say, Honda will say on, let's say 23rd, morning 10 o'clock, they'll say on the portal, if I'm the supplier, they'll say, Praveen, these are the consignments you have to supply, say in this plant in Rajasthan, in this plant in Chennai, in this plant in Haryana. So plant specific, I'll get to know what material I have to supply. Similarly, I have my supplier overseas. Now, I am a buyer who's there in India. Before the consignment is shipped, I need to have a testing and verification. Now, quality parameters are very important where if the consignment comes to India, if there is any defect or malfunction, again I have to send back out of India. That cost me very, very hefty in case of import and export transactions because formalities, the customs procedures are very cumbersome. Also, the duration, the cost of freight, these are all very, very costly affair. Those matters, I appoint someone called buying agent. Now, this buying agent is a fellow representing importer overseas. So what happens here? For a moment, let me say seller in Germany, Mr. X agent Germany. Then for a moment, I'll say Mansa importer India. Now here, what instruction will be given is that I give an instruction, like Mansa will give an instruction to the seller saying that please consign the goods to Mr. X, let him do the verification. Once the verification is done, let the goods be shipped from that place to importer in India. So this could be the X may travel to the seller's premises by undertaking test parameters, or seller may ship the consignment to X. After doing the test verification, X can do the shipping to Mansa in India. This could be a transaction where this Mr. X is acting as a point of contact to verify the quality before the consignment reaches, leaves the overseas. Now, for doing this, this X will be paid a commission called buying commission. That means to say a predetermined percentage of the purchase activity. So here, Mr. X is going to do various activities. One, do a planning. Like Mansa says to Mr. X saying that this month, these are the consignments we need to have. So X does the coordination with the seller in Germany, maybe for the timely dispatch, maybe for the pricing, maybe for the quality issues. For doing all this, X is going to get some commission, which is called as a buying commission. So this buying commission is something which is excluded as per Rule 10. Rule 10, when I come, I'll give you a list of charges which are excluded. So as of now, the purchase commission is something which I have to include. Buying commission I have to exclude as per Rule 10. So answer here, I'll mention as relevant. Now I'll also just mention the serial number so that it will be easy for you to ask any question. Now, I have 6 transactions which are given. For each transaction, I have marked my comment whether it is relevant for my transaction value or it is irrelevant for my transaction value. Accordingly, I'll say my transaction value will be is equal to $22,500 plus $675 plus 415 plus 1250 plus 120. This is going to be my transaction value in foreign currency. This is it, dollars. Now, value for Section 14 of Customs Act. My value for Section 14 transaction value is going to be 24,960. Now, in INR, now I have a conversion rate they have given. Exchange rate notified $1 is equivalent to INR 78. So I'll say transaction value for INR will be 24,960 into 78. Now, how do I pick this transaction value? There is a value which is notified by my CBIC. I'll come to a second example little later to give you a clarity how this has to be determined. So I'll say this is my INR 19,46,880. So conversion for this, we refer to Section 46, Section 50. Maybe another 10 to 15 minutes time, I'll explain in detail how my rate is relevant on the basis of filing of bill of entry, on the basis of entry inwards of a vessel or my this air, what you call the air flight. This is my first answer to Section 14, how we determine value for imports. Moving from here, I have various rules. Under Section 14, which is going to help me, where there is a related party transaction. So the rule says that whatever transaction value is there, we will evaluate as per the rules and accept the transaction value. Point number 2, so when there is no sale and where buyer and seller are related, price is not the consideration. Then we have some method called the computation method. How we have to compute the method where there is no sale of the goods by the seller in the overseas to any other buyer in India. Then these rules also guide the proper officer when the value has to be accepted, when the value has to be rejected. Now, when as this today's discussion blindly follow the concepts what I'm explaining. Technicalities, once you read at a later point in time the institute material, you'll get more clarity and comfort with respect to concepts. So these valuation rules are going to give a guidance to the proper officer. For what? Either to accept the transaction value or reject the transaction value. Now, why and how, I'll explain you in the course of my explanation. Now, this 42 I have discussed in the previous class where I have given a couple of examples, like example, steel, then aluminum ignites, where there will be a value fixed by the customs. We call this as metals, steel, your bullion, jewelry, then aluminum. So there are various materials where the government, by a notification, they fix the tariff value. That means to say, my transaction value has no relevance. So there is only few list of goods where I look into my tariff value. This is the important point where Mansa was touching upon with reference to this Garden Silks milk case. Garden Silks milk case. Where, so how do I know what is my foreign currency, the rate of exchange? Whenever we talk about the conversion, generally we have reference to Accounting Standard 11, which deals with your foreign currency transaction. Under customs law, they say in case of your imports, the provision says that please refer to the bill of entry. Please refer to the bill of entry. The date available, the rate available on the date when a bill of entry is presented under section 46. So here, examination, they'll give you various problems where they'll give you different rates. Like example, you may have RBI rate. You may have one more rate which is given by authorized dealer. You may have customs rate. You may have customs rate where they'll say on the date of entry of vessel, or on the date when a bill of entry or your shipping bill is filed. In case of exports, shipping bill or as the case may be, present under 50. So the day you present your shipping bill under section 50, that is relevant for me to adopt my conversion rate. Examination, they'll give you these various rates and you'll be tested to find the answer, where 1 mark is a weightage by way of a MCQ. Please expect definite one question as a MCQ or 1 mark out of 6 marks problem. When I have a problem for 6 marks, 1 mark is for conversion, or I'll call translation. 1 mark for my computation of assessable value. How to calculate your transaction value? How do you calculate your assessable value? Then 2 marks for adjustments. Whatever price adjustments are there, for that 2 marks will be the weightage they'll be giving. 1 mark for your provisions to examine. Then finally, 1 mark for your final answer. So this is how they will break your problem into various steps. One of that, this conversion of money in foreign currency to INR. This is something which will be tested in your examination. So what I'll do, I'll take you through one problem which is connected with your conversion. I have 2 problems taken for converting this money in foreign currency into INR. Hope you can see my Excel file, students. If there is any difficulty, Kaushiki says that half an hour is passed. There seems to be Kaushiki, I'm not sure whether this problem is only with you or other students. I do understand. In between the break, maybe at 7:30, let me have a call with the technical team. I'm really sorry. I don't know why the technical team is not getting in touch with you. You are mentioning that on YouTube, you're not able to ask questions. And this Board of Studies app is not working, only on mobile it's working. I got your concern, ma. What I'll do, maybe during the break, I'll take this issue with the concerned technical team. If not, let me have a call with some senior in the Board of Studies, maybe today's class in between. Mansa is asking this question. So this value is to be considered as per Section 20 of Customs Tariff Act. Yes, Mansa. This has to be considered as per Customs Tariff Act. Now, coming back, this for the computation of duty, Mansa. For the purpose of computation of duty, I have to take that into consideration. Now, question here, students. Goods imported by Mrs. XYZ Private Limited. Goods imported by XYZ Private Limited for $24,560. Please compute the value in INR. So this is my conversion foreign value, 24,560. Date of entry of the vessel on 12th August 2021. Exchange rate is $72, 72 rupees per dollar. Date of filing of bill of entry under 46, section 46, way on 15th September 2021. So there was a delay of more than a month, or maybe close to a month, where the bill of entry is filed on 15th September. On that day, my conversion rate is 70 rupees per dollar. So here, out of these two, what is the rate I have to add up? Answer will be $70. 70 rupees per dollar is the rate as per section 46. I have to convert. So I will say foreign currency rate to be adopted. I'll say 72. Answer will be 72. I have to adopt. Sorry, 70, not 72. It's 70. As per the provisions, the day when you file your bill of entry, that is the day. On that day, what is the conversion rate available, that you have to take into consideration. So here, this is my relevance. I'll say 70 is relevance. What is the value in INR? 24560 into 70. This is my conversion into INR. 17,19,200. Now, this is in case of imports. Similarly, second example they have given, in case of imports, goods are imported by Mrs. PQ Limited for Singapore dollars 580. Compute the value in INR. Date of filing bill of entry is on 24th October 2021, where one Singapore dollar cost me 54 INR. So per dollar, I have to pay 54 rupees. Similarly, the date of entry of the vessel happened on 2nd November. After I filed my bill of entry, the vessel entered to the customs station on 2nd November 21. That point in date, 1 Singapore dollar is equivalent to 58 INR, 58 rupees INR. So as per my provisions under section 14, the rate relevant foreign currency rate to be adopted shall be your 54, because I filed my bill of entry on 24th October 2021. In this case, my value in INR will be 580 into 54 rupees. I'll get an answer of 31,320. So this is one point where please expect 1 mark MCQ question, or you may expect this part of the main question. I can see the message from Mansa. We are all facing this issue. I think it's a serious issue. Kaushiki, I understand everyone is having this issue. During the break, let me have a call with the senior at the Board of Studies, and let me see how to get this issue resolved. Let's move on from here. Now, date of determination of value of imported goods. I have 13 rules. Now, as on today, there are 13 rules. These rules are copycat of generally accepted trade tariff agreement, read with World Customs Organization provisions. The advantage of reading these rules, you read the import provisions, UK, US, or any other nation, by and large, these import and export, the customs provisions are going to be uniform. Whatever provisions we read as on today, these are adopted from your general agreement of trade tariff, or I can also call as World Customs Organization provisions. These are identical in most of the nations with a minute change adapted to the respective nations. So here, rule number 2, definitions. There are basic definitions which are used. I'll skip these definitions for the benefit of time. In institute material, they have given some important definitions. Identical goods vis-a-vis similar goods. I'll touch upon this difference. What do you mean by identical goods? What do you mean by this identical vis-a-vis similar goods? I have given a very fantastic example in my Excel file. I'll explain how to understand this particular concept. Then rule 3 gives me how to determine the valuation, how to determine the method of valuation. Means whatever transaction value is given, whether we have to accept this transaction value, not to accept this transaction value. In case of identical goods, I adopt rule 4. For similar goods, I adopt rule 5. Rule 6, they say when you fail, my determination of value is a failure under rule 3, rule 4, rule 5, then I have to travel to rule number 7. Rule number 7, there is a simple method. This is called deduction value method. That means I'll take a comparative price, which is very simple method. This method, I take a comparative price from that particular existing comparative price. I eliminate few of the values to come to something called transaction value. Rule 8, little complicated or little pragmatic, which is called computed value, where the price is determined on the basis of a few questions asked by the customs officer, where the value is computed. Residual value, this is very rare method. As we remember, best judgment assessment, something like that, residual value method is there. Rule 10 is one of the important rule where I would say it is a guidance. It is a guidance for all other rules. Okay? What to be included, what to be excluded. In the process of finding out the value, what I have to include, what I have to exclude is explained in my rule number 10. Declaration by the importer. This is declaration by the importer. This is a small mistake. Rejection of declared value, interpretation. These are ancillary provisions which will not be important. Examination, I was telling you, 6 marks is the weightage of a problem. Adjustments connected with rule 10 in relation to freight, in relation to insurance. For sure, whenever a problem is tested in your examination, this rule 10 will be touched on with respect to freight, with respect to insurance. If you practice all the problems in institute material with your RTP or your suggested answers, I'm pretty confident examination 6 out of 6 you can score from this particular chapter. And please keep in mind, minimum 4 marks is a weightage from your examination point of view. Don't take it like this particular chapter. Now, I'll explain the concept with a very simple example. Then I'll come to this particular definition. Let me come to your Excel file. In Excel file, I have given an example with respect to identical goods and similar goods. Identical goods and similar goods. Mans is asking this question. Sir, in case of re-import, calculation of transaction value, is it same? Definitely yes, Mansa. I will go with the transaction value, what is declared by the by importer. I'll see whether all these conditions under section 14, if complied, then I'll go with the transaction value. Answer is a big yes, Mansa. Now, identical goods, I'll give an example where I have okay. let me take this example first. Okay. Identical scenario number 2. I have a laptop which is having a configuration. This laptop, what you have imported, this has got 16 GB RAM, 512 hard disk, and processor i5. But in scenario number 1, the color of the laptop is black color. What is the value? 54,000 rupees INR. Similarly, I have one more transaction where Dell laptop, which has got a hard disk, which of 512 GB. My RAM is 16 GB, processor i5. Now, if you look at each of this feature, Maki ka Maki, 1 to 1 matches. But only one factor which is not matching is the color of laptop is blue color. The cost is 52,000. Now here I call this as a identical goods. That means all the features, characteristics are similar. There's no variation except the color in these goods. Then I call this as identical goods. So why there is a variation in the price? Most people will prefer black compared to blue. That was the reason I have premium for black color. Now this could be one example. Please keep in mind identical goods. Similar goods. I'll give example of similar goods. Let's take example of Dell compared with Lenovo. Dell compared with Lenovo. Now Dell, I have a RAM of 16 GB. Lenovo, I have a RAM of 12 GB. I have a hard disk of 512 hard disk. Similarly, I have a 512 hard disk in Lenovo. Processor in case of Dell, i5. Processor in case of Lenovo, i8. Now, price of Dell, 54,000. Price of Lenovo, maybe, say, 48,000. I'll say 48,000. Now, this I can give an example of similar goods. Now, what is happening here? The features are comparable. Laptop is a laptop, but when I compare, there should be a similarity between these performances. Now, what happens when there is a related party transaction? I don't know way to compare. I don't know way to identify. This could be a modus operandi way the proper officer adopts to do a derivative or comparative analysis. Let me come back to my presentation. Now, definition for identical goods. Identical goods, please look into your institute material. They have defined identical goods. Means the goods which are same in all respects. Same in all respects. Now, in the example I have given, you have RAM, processor, hard disk, including physical characteristics. Including physical characteristics. Quality and the reputation as the goods being valued. Now, quality, same because manufactured by Dell. Reputation, manufactured by Dell. Both have the same reputation, except minor differences. Now, what could be the minor differences? Maybe color, maybe what can I say, backlight for the keyboard. So these could be minor differences which call themselves as identical goods. These goods are produced in the country in which goods being valued were produced. So they say Dell China, Dell China, or Dell Japan, Dell Japan. Produced by the same person who produced the goods, or where no such goods are available, goods produced by a different person. Now I could compare Dell with Dell, or I could compare Dell versus your Lenovo. Now when I compare Dell with Lenovo, 8 GB RAM, 8 GB RAM. 512 hard disk, 512 hard disk. Processor Intel 5, Intel 5. This is how I come into my identical goods. Hope this identical goods is clear, ma? Examination, please expect 2 marks theory question. Now, if you understand this example, how you present your answer, it is up to you, but the concept should be present in your examination. Now, similar goods. Now, place of importation, they have given. I'll come to the definition called similar goods. Means imported goods, which although not alike, in all respects. Now, I'm doing a comparison of a laptop versus laptop. But does they have all the features comparable? Now, I'm comparing i5 with i8. Laptop is a laptop, but the processor Intel i5, Intel i8. Probably this is a high end. Now, this is how I come to a comparison for similar goods. Have same characteristics, which have same characteristics and like component materials. Now, my integrated circuit or your processor, everything is same, which enable them to perform the same functions to be commercially interchangeable. Now, this is important. Commercially interchangeable. Now, they're saying that when I compare, I should be in a position to compare, or they should be interchangeable for their performance. So i5, i8, i5, i5. Now, this is how they do a comparison for increasing the value or decreasing the value. Now, where do I come across these modalities? If you imagine, say, a motor car. Motor car has got a pump engine, which is manufactured by, say, Valvo. This pump engine, which is manufactured by Valvo US, I could also have a manufacturer called Sparrow, which is manufactured in Germany. Valvo, which is available in Japan. Sparrow, which is available in Germany. Now, these are two competitors. When there is a benefit of doubt to a proper officer, this is how he compare the Valvo product with the Sparrow product to say whether I can call this as a similar goods with a minor variation. Now, brand is different, but functionality should be the same. Like when we talk about a car, we have something called RPM, that is rotations per minute. So I should have this cubic meters, the engine capacity, RPM. The features should be in a comparable position. Produced in the country which goods have been produced. So it could be the same country and produced by the same person or maybe a different person. So they're saying, to the extent possible, please stick to the same country. So if I want to compare with Germany to Germany or Japan to Japan, this is how I take into comparison for identical goods and similar goods. Hope your question doubt is clarified, Mansa. You're asking the similar goods can be equivalent goods. Answer is yes, it is equivalent goods. Related party transaction, income tax, GST, international transaction. You have same definitions. I'll just skip this definition. Now, starting with rule number 3, which talks about determining the method of valuation. Rule number 3, this is a starting rule which says, how do I accept your method of valuation? So they say the proper officer, first he will see, should I need to accept or should I need to reject? Subject to rule number 12. Assuming for a moment, if the rejection is not there, value of imported goods shall be the transaction value. I call this a step 1 starting point. Adjusted. I circle this term called adjusted. How? In accordance with the provisions of rule number 10 towards cost and services. As I have mentioned, there are some additions, there are some deductions. Like we do bank reconciliation, like we do input tax reconciliation, GST input tax books versus 2B. There are certain additions and deductions as per rule 10. So what do they say? Step 1. Please examine rule 12 whether the proper officer is accepting the transaction value. If proper officer accepted the transaction value, then go to rule number 10 to see what adjustments needs to be done to your transaction value. So here, when I say transaction value, when this price paid or payable, whether this exists. Adjustments in rule 10, the construction cost, that is the design cost in India, erection of plant and machinery, post importation. All these adjustments have to do under rule number 10. Now, they are saying that, look, I'm going to accept your transaction value, provided there's no condition for disposal, asset disposal. Students, just understand as a theory. Forget your technicalities. Whatever I'm saying, please visualize you are a proper officer. How you are going to evaluate? How you are going to evaluate your price in front of you? So first condition, if I want to sell a particular asset, disposal of an asset, or usage of the goods, Now, I'll give an example. Take example of say Google US has sent some 100 vehicles to Google India. Now, this 100 vehicles are given by Google US to Google India. For a moment, let us assume that this vehicle is an automated vehicle, which has got all the features like internet connection, your technology for reading the books. They, as a part of CSR activity, they wanted to give these vehicles to the rural areas where they wanted to impart training skills to the underprivileged. Now here, if you look at the terms of contract. Say life, then sale, then maybe I can say disposal. Google US says that I give this particular goods for 5 years. That means there is a condition I cannot use beyond 5 years. What happens after 5 years? Google US says you have to dispose this particular vehicle to the local ministry of education, health and education. So they wanted to use it part of their upliftment of education in rural India. Or the Google US says that, look, if you want to sell this asset, this is the value at which you have to sell. So all the conditions with respect to usage, all the conditions with respect to disposal of asset are not completely freehand. If it is not freehand, then transaction value will not be accepted. In simple terms, value will be accepted where there is no restriction. Please read carefully. I should not have any restriction. If there is a restriction, my transaction value is going to be questioned. Hope this explanation is clear, students. Now, whenever I talk about a restriction, there could be a general restrictions. What is that? My restrictions by the public authorities in India. Like example, any car, any transport vehicle, there is a norms that from the date of manufacture beyond 10 years, you should not use, like example, Delhi NCR region. There's a pollution norms in Delhi NCR saying that any vehicle which is having like more than 5 years from the date of manufacture should not be operated in Delhi NCR. If they want to operate, prior permission should be taken from the transport ministry. So likewise, if there is a norms by the government of India, not to worry. Limit the geographical area in which goods may be resold. Now, this is something geographical area when we say like there could be conditions. You can sell to Asian Pacific country, or you can sell only within the territory of India, because they have this global boundary. Like example, GE. Now, when General Electric Motors sells the goods, they say you can sell the goods only in the nation of India. Any goods you want to sell to Singapore, don't sell from India. Don't import to India. From India, you don't export to Singapore. Why? GE US is going to sell the goods to GE Singapore directly. That could be a territorial condition which is acceptable. Also, the third condition they say, these conditions, that whatever restrictions are there, that substantially are not going to affect the value of goods. Now, this is a point of interpretation. Strictly a point of interpretation. They say that when I read your condition, there is some conditions. Those conditions are not going to substantially affect. Now, this is a value of judgment. So, how do we determine? This comes out of experience, students. As of now, even if I put across these practical, technical aspects, it will be a bouncer. So, please understand, when someone reads the agreement, they should not come into a conclusion that the terms and conditions or restrictions are not going to affect the price of the goods. In those cases, they say whatever transaction value is there, that will be accepted under Rule 12. Next, the sale or price is not subject to conditions, subject to some condition or consideration for a value which cannot be determined in respect of the goods being valued. Now, again, this is purely a point of judgmental. This is wherever I'm writing interpretation, this is the indication that this comes out of experience. This comes out of experience. Now, this is not off-the-shelf theory or practical example. This comes out of way the business is structured, where the transaction has been coiled to meet the requirements of the industry. They're saying that the sale or price is not subject to conditions or consideration for which a value cannot be determined. Now, for a moment, say royalty, something else called loyalty bonus. There are various circumstances, various reasons where my selling price is not being accepted because the contract has been such a way, the conditions are such a way fixed, which is going to affect my consideration. In those cases, the Rule 3 says that, look, I'm not going to accept your transaction value. So if I don't accept transaction value, travel further, Rule 4, Rule 5, Rule 10, so on till Rule number 10. Next, no part of the proceeds of any subsequent resale, disposal, or use of any goods will accrue directly or indirectly to the seller. Now, example for this, say royalty is a very classic example. So what if there is a royalty? This royalty will be added back to my value of import. How it works? I'll give an example. Say, import value, say $10,000. For every sale, every unit sale, say royalty is fixed at the rate of 3%. Now, domestic tariff area, what I'll do, whatever landed price is there, so that I'll have a value addition. Then I'll sell for say $15,000. Now what they say? This 15,000 on that 3%. It happens to be so $450. $450. So they say that this landed value for the purpose of payment of customs duty, they say that please declare your transaction value. In this case, 10,000 is the transaction value. For that, royalty, because value addition may not be known. If value addition is known, I'll take that into consideration. If value addition is not known, for ease, they'll say at the rate of 3%. For the moment, this happens to be 300. My transaction value is going to be $10,300. This is my revised transaction value as per section 14. This is how either they will accept your transaction value or they will remodify your transaction value. Let me see if there are any doubts before I go further. So far, so good. No doubts. Moving further. The buyer and seller are not related. If buyer and seller are related, the transaction value can be accepted as per sub-rule 3 below. So they're saying that so far, as of now, I have two conditions. One, your conditions for sale are very simple, which is not going to be linked with any future event, or there is no proceeds, which is linked with the proceeds given to the seller on the basis of future sale, which is going to happen. So based on these conditions, I'm going to accept transaction value. So what if I'm a related party? In case if there is a related party transaction, they say, look, I will accept your transaction value on the face of it, provided you prove that there is no influence on the price. Your relationship did not influence the price. This is something where we call technically something like, I'll come to a new screen, special valuation bench. Special valuation bench, which is called SVB, where in case of related party transactions, the price is evaluated by the proper officer. What happens here? Seller, buyer, say independent, buyer, group company. Say I have 4 people. Now, this is how we have to demonstrate that the price is not impacted because of related party transaction. For a moment, seller is in US, the buyer is in India. So there is a group company in Singapore. There is an independent buyer, maybe in India. Now, if the seller sells the goods to the buyer in India per unit, if the transaction value is say 12,000 US dollars. The same seller, if he's selling to any independent customer in India, the price is 12,000 US dollars. Now, this is a clear-cut case where I go to the proper officer and say, my dear proper officer, this is my transaction value, my seller giving to me. The customer's officer will ask, okay, do you have any sale by your seller to any independent buyer in India? If the answer is yes, I would say there is no impact on my supply value. Now, this is a first transaction, which is very clear cut. Now, transactions will not be that easy. So what I'll do for a moment, I'll say, so there is no transaction from this seller to this buyer, assuming this route is not there. Then I have to say, so look, the seller in US is selling to the group company, to the Singapore in this place. The transaction value is 12,000 USD. Now, this is another alternative where my seller is selling to another group company. Though the price is sold, though there is a related party transaction, it didn't impacted my sale value. Now, this is a way I prove to my proper officer the price has not been affected. Also, assuming for a moment, if I don't have this route also, then I'll establish what if my group company in Singapore sells to an independent buyer in India the same commodity for a price of 12,000 or maybe 12,500. Now, this is another example for me to establish that price is not influenced or your relationship didn't influence the price. Now, theoretically, this is how we establish to the satisfaction. Students, examination, if you were asked for 3 marks, theory question, you can put all these pictorial examples. It will impress the examiner to give weightage in your examination. Before I go to the next slide, let me see if there are any questions. Good. So far, so good. Let me go on. Now, so what if the transaction value has been accepted? Because of related party transactions, I have to prove that. So please look at the transactions, whatever I have given in the previous slide. I demonstrate transaction value which closely approximates to any one of the following. I have identical goods, I have similar goods. I prove that any good sold to unrelated party is established. If this is not available, then I go for deductive value method. That means whatever value is there, I'll eliminate profit. I'll eliminate general administrative overheads to say this is my transaction value. If that is not possible, then I go with my computed value method. In computed value method, what I will do? In computed value method, cost of goods sold, where I take my cost sheet duly audited by a cost accountant. Based on my cost accountant cost sheet, like we have in India, the cost management or CPA, who is there overseas, I get some certificate to prove that on the basis of this computation, look, this is my prime cost, this is my general administrative overheads, and this is my landed value. So this is how I compute my value under Rule 3. I'm going very slow to the reason Rule 3 is a prima facie concept which will be tested in your examination. When a transaction value will be accepted, when a related party transaction will be tested or questioned from your examination point of view. Moving further. Substitute value, somewhere in your institute material they have used. This is nothing but alternate value. Generally, they say alternate product will not be taken into consideration, shall not be established. Like for an engine, I cannot take a DC. Alternate substitute can never be taken for my comparison purpose. Like example, say there is this, what do you call, air compressor. Air compressor has a functionality. In compared to air compressor, if there is an alternate to air compressor, say vacuum pump. Vacuum pump cannot be compared or its value cannot be taken for an air compressor. Both are different, though I can say as alternators. I cannot take alternative values for my valuation under Rule 3. So what if I fail Rule 3? My Rule 3 is a failure. Then they say travel Rule 4 to Rule 9 for deriving the transaction value. Now, Rule 4, I talk about my comparative, that is identical goods. I'll give a simple example, students, before I explain this theory. For a moment, let me assume that identical goods. There is a reference to a language called commercial level. Commercial level. I'll give an example so that you can easily understand this provision. Say there is a seller. So there is a buyer. I would say buyer 1, buyer 2, buyer 3, buyer 4. Quantity, value. Say 100 units, 5 units, 500 units, 800 units. Value per unit, maybe in terms of in dollars. 100 units, price per unit, maybe 12 rupees. 5 units, maybe 15 rupees per unit. 500 units, maybe 10 rupees per unit. 800 units, maybe say $10 per unit. Now here, when I look at the transaction, there is a supplier or seller who is overseas. There are buyers who are there in India. Now, when you look at this transaction, there are different buyers who are buying the goods from the same seller called Mr. X. Now, this is a data which is a data available on Ministry of Commerce or Exim Bank. With Exim, all this information is available. For a moment, there is one charitable organization. There is a charitable entity or the charitable trust. This charitable trust has ordered for, say, 10 units per sample. For a moment, let us understand that there is a yoga center. This yoga center has imported a mat called yoga mat. This yoga mat, they say, let's use it. If we like the commodity, then we will place an order on this particular item. Now, when it has come for sample, there is no value. There is no value. Now, this yoga mat, I call identical goods for the reason this seller, Mr. X, who is selling to this buyer B1, B2, B3, B4, these are all maybe retraders in Indian market. Now, this product which is sold to these particular people, this product which is given to this trust, I call them as identical goods. Identical goods. Why identical? Yoga mat is a yoga mat sold to these people or to given to this trust. Now here, my rule 4 says that please compare the goods at a comparable commercial level. They use a language comparable commercial level. Now, for a moment, you happen to be a proper officer. The question to you, the price available is like this per unit, $12, $15, $10, $10. When you have this combination, what will the price you will take for deriving the value for this trust? Is it $12? Is it $15? Is it $10? Answer will be comparable commercial level in terms of quantities, So here, since this charitable trust has purchased or imported 10 units, I have in this entire quantity in this table, this is a table which is most comparable or coming close to the proximity of the quantity of this trust. So in case of this trust, my per unit happens to be $15. So in this case, what the proper officer will do? Applying rule 4, as per rule 4, the transaction value will be 10 units imported into 15 rupees. I'll get $150 as my transaction value. This is the importance of my rule 4 when it talks about identical goods. Let me see any doubts in this particular rule 4. So far, so good. Let me come back to my problem. So here they say that, in this case, they say that whenever we refer to transaction value, in case of identical goods, they say, first, I'll go to the provisions of rule 3. For what? Was there a rejection under rule 12? Was there an adjustment as per rule 10? The value of imported goods shall be transaction value of identical goods sold for export into India. So in this case, the trust which I am referring, students, the commodities which are imported into India, I'm looking at the comparable level available for various buyers. Imported at the same time or maybe at same value. When the More or less same time when I say maybe month, maybe that quarter, etc. Right? In this case, they say the buyer be to whom we were referring, that should not be a provisional assessment under section 18. The goods should not be provisionally assessed. Then they say, please look at the quantities. What is that? Is first you look at commercial value. Then you look at your quantity. So if the sale is available at same commercial level, but in different quantity, or different commercial level, but substantially the same quantity, or different commercial level with different quantity. Now, these are the various permutations and combinations. Now, I cannot have apple to apple compare. I can compare yoga mat to yoga mat. 10 yoga mats were given as a free sample, but one buyer has purchased 5 quantity. So here I have various permutations and combinations. When I'm comparing in case of identical goods, I have commercial level, but quantities are different. When I say commercial level, this is for 10 quantity, that is for 5 quantity. But commercial level, more or less same operation level. Different commercial level, like a wholesale dealer compared with a retailer. Manufacturer compared with a wholesale dealer. Quantities may be substantially same. So you have these various permutations and combinations. So when I say commercial level, my commercial activity may refer to manufacturer, may refer to a wholesale dealer, may refer to retail dealer, may refer to end user. Quantities may have a variation in most of the cases. I cannot have blanket comparison in all the cases. Then they say, please do the adjustments as per Rule 10 and accept the value which is there in any of these particular cases. So what happens if I have 2 buyers where 2 prices are available? In those 2 cases, the least value, whichever is available, that I'll take into consideration. When I have 2 prices, commercial level are comparable, 2 prices are available. Whichever is the least price available, take that into consideration. Let me come to one example before we proceed further. Hope you can see my Excel file, students. Yes, this is a third example I have given you for application of Rule 4. Application of Rule 4. The question here, Mrs. Bhakti Trust has received notebooks and stationery for free distribution in the domestic area of Maharashtra from Germany for 1,000 pieces. So here, the seller in Germany has sold money is given by way of free distribution 1,000 pieces to a trust. There has been no price charged by the supplier except transportation insurance by the importer. Now, except the petty delivery charges, nothing else has been charged. Details of import for the same nation at the same time available as below. So as per the EXIM report available with the proper officer. Serial number, unit price, quantity imported. Now, here I have 4 buyers identified where 800 pieces, 50 pieces, 1200 pieces, 900 pieces. Now, when I have this quantity compared with this Bhakti Trust, how many pieces were imported? 1,000 pieces. So when I compare for Rule 4, I'll say this is relevant. 50 pieces, 1,000 compared to 50, I would say irrelevant. Why it is irrelevant? Quantity in terms of commercial comparison, this is irrelevant for me. 1,200 pieces, close to 1,000, I'll say again relevant. 900 pieces, again I'll say relevant. So here I have 3 instances, that is 800, 12, 900. 3 instances where I have a close proximity of comparison. In the process of evaluation, 3 prices I have evolved. So I have 12 rupee 50 paisa, I have 10 rupee, I have 11 rupees. So what I'll do when I have 3 items which are proximate, I'll take least of them as my comparative price adoptable. So as per your rule 4, when I have multiple prices available, I choose the least price which is available. Accordingly, my transaction value happens to be 1,000 pieces imported into India into 10 rupee per unit is going to be my value. That's how it's going to be 10,000 US dollars. This is going to be 10,000 US dollars. This is my transaction value as per rule 4. Hope this is clear, students. Great. We are at 7:35. Let's have a break for 10 minutes. Let's reassemble back at 7:45. Let us continue with our discussion. There's one question in the chat window. Mr. Raman is asking this question. So how frequently these rules get amended? Raman, these rules, as I have mentioned, this is as per the generally accepted trade tariff trade agreement, also read with world customs practice. These rules are predominantly same across the globe. Like no, it doesn't change like GST every now and then. So they have the basic structure which is uniform across the globe and fine-tuned with few requirements of the specific nation. So as such, I would say this will get amended every now and then. And with respect to Rule 4, hope all of you have understood how we adopt the pricing with respect to comparative quantities, commercially comparable quantities. And students, I have escalated your issue with respect to this Board of Studies application to the concerned person. They said that they have been looking into this and someone at the technical level have to attend to this particular problem. So let me see how fast they can get back on this particular problem. So let's come back to our today's discussion. Rule 4, we have understood how to apply the value for identical goods. Once we know what is the procedure for identical goods, similar value is there for similar goods. Rule 5 is for similar goods. So whatever concept, like no, this yoga mat I was saying. Similarly, if there are any transactions where similar goods are imported into India, where the proper officer has to derive the transaction value, provisions of Rule 4, mutatis mutandis, will apply for this Rule 5 also. In simple terms, they say, whatever provisions we have explained in Rule 4, the same apply for the identification value of similar goods. In your institute material, they have given a table like transaction value of identical goods imported at or about the same time. Identical goods should be sold at the same commercial level. Adjustment to be made on account of differences in distance and transportation. In case of more than one transaction value, lowest value shall be considered. So this is a modus operandi in case of identical goods or similar goods. Examination, probably. 1 mark MCQ question may be expected where they'll give you computation of the landed price, that is the transaction value, as per Rule 4, in case where there is a commercially different quantities are available at different prices. Next. Rule 6. Now, the same, whenever you have failed to apply Rule 3, why failed to apply Rule 3? Surprise is not the sole consideration. Though it is a related party transaction, price was something which is not acceptable for comparison by the proper officer. Or, so there are no identical goods. This is the only new product which was developed for this customer. There are no similar products. Now, I fail applying Rule 3, I fail applying Rule 4, I also fail applying Rule 5. Then they say that, don't worry, please travel to Rule 7, that is deductive method. Please travel to Rule 8, that is computed value method. This is the next step, Rule 7 and Rule 8. Either you go for deductive value method or go for computed value method. Now, deducted value method, this is a very straightforward method where they say, look at the alternatives, not alternatives, look at the other goods which are identical, goods which are valued, which are identical, which are similar. And those goods are sold in India. So they say that whenever you fail Rule 3, Rule 4, Rule 5, please come to Rule 7. In this, either you give value for the goods which are valued at that point in time, or give identical goods, or give the value for similar goods. In those cases, I will do some adjustments with respect to such value. What is the adjustments? The adjustments are with respect to the commission, the additions made by way of profits, or general expenses. Now, this deductive value method, generally, practically, how this will be adopted. I'll give you an example. Let me come to a new screen. Just give me a minute. Yeah. So let's example, there is a exporter in Japan. There is an importer in India. There is a exporter in Singapore. Now, importer in India, I'll say B1, B2. So this exporter in Japan is selling the goods to customer B1. This exporter in Singapore is supplying the goods to B2. Now, for various reasons, there is a failure of Rule 3, there is a failure of Rule 4, there is a failure of Rule 5. Now, this particular deductive value method, Rule 7 says that, don't worry, whenever you fail Rule 3, Rule 4, Rule 5, various reasons, you can adopt this deductive value method. That means to say, the price of B2 to be adopted and deduction for general overheads, profits, or any other selling and distribution or any commission paid on those goods. This will be deducted, whatever price is available. For that price, I do a deduction of various prices and then land up with something called deducted value for Section 14 of Customs Act. So they say, wherever you don't have this Rule 3, 4, 5 accepted, then you go for deductive value method. That means whatever the alternate price available for various party to the another party, that will be adopted for valuation purpose. This is your rule number 7. So the adjustments, commission, profits, general expenses, also cost of transportation, because Singapore to India, Japan to India, I have to make the adjustments, and any other duties and taxes which are paid in India. These 3 points will be a point of adjustment. Examination, not much to worry on rule number 7. Now, so what happens if I don't have any transaction at that time? Like say 17th September 2022, the goods have reached customs station. For good, bill of entry is filed. But 1st September 2022 to 17th September 2022, if there are no such transactions as per the EXIM report or alternate price available, then the law says that you can wait earliest date of importation, but before expiry of 90 days. Wait for 90 days and try to get an alternative price available for those commodity. So law says at that point in time, if you don't have alternate identical similar goods, then wait for a period of 90 days from the date of import and then do this deductive value method. So what if I don't even get similar goods or identical goods which are sold in India? As an example I gave, Singapore to the India. So those alternative comparative is not available. Then they say, if those goods are sold after processing, if those goods are available in India after processing, then please do the adjustment with respect to the processing cost and do the calculation as per 1 to 3 of sub-rule 1. So they say, please go back to your sub-rule 1. Please do these adjustments of price, profits, transportation, commission, etc. after removing this processing charges. I understand that this is little technical. Practically, when you get onto this valuation, appraisal, or advisory, that point in time, you'll understand these provisions. But I'll make as simple as possible for you to understand this particular provisions. Next is rule number 8. Very, very straightforward. I would call a plain vanilla, where usually for provisional assessment, this method is generally adopted. Generally, for provisional assessment, they adopt. I don't say that this is a rule, but anyone who thinks of computation, what you will do? First, you start with, give me the value of material. For that, what is the processing charges, fabrication or other processing charges? Then add whatever profit is there, keeping in mind general expenses, which is a thumb rule for this kind of goods which are exported from the country of origination. And to that, make some adjustments with respect to rule number 10. Whatever adjustments are there in rule number 10, these adjustments are generally in relation to freight, loading, unloading, then insurance. These adjustments is what you have to make as per rule number 10. If I do all these adjustments, I get something called computed value method. Now, this is generally the basic modality which will be adopted under customs law. And rule 9, this is called best judgment assessment. Generally, and very rare we come across this rule 9 for its application. They say, as per generally accepted accounting principles, like that, using the reasonable means, whatever rule 2 till rule number 8 we have studied, please look at those general rules. And on the basis of that, on the basis of the information available in India, someone will do the valuation. And that valuation, they say, it shall not exceed the like goods or ordinary goods sold for offers for sale in the international trade. So this is the rule 9 deductive method. Now, what is this rule 9, sub rule 2? They say that while doing the price computation method, please don't adopt the price of the goods which is there in the domestic country of export. From where the goods are exported, what is the price prevailing in that country? Blindly don't adopt that value. Similarly, what is the value available as per customs? Don't adopt that value. And don't be arbitrarily fixing the price. Now, these are general norms which are there as per rule number 9. This is little technical. Let's go on to rule number 10, which is the most sought out rule in terms of computation. Please keep in mind, 4 marks is the weightage on the basis of this rule number 10. So here, in doing the cost adjustments, in this we refer, this particular rule, we will refer in rule 3, rule number 4, rule number 5, and rule number 7. So based on this rule 10 adjustments, all these 4 rules, we will try to make the adjustments. What does it say? In determining the value of transaction, they shall be added to the price actually paid or payable of the imported goods following. So they say that first add these items. Now examination, please make a note. These are the adjustments which you are going to make as a correction. Take your working notes. Please write down rule 10 hyphen, rule 10 hyphen, cost and services, cost and services, cost and services. Below that, add, put the heading, add, under that, write down prices incurred, price incurred by the buyer, price incurred by the buyer and not included in transaction value. Price incurred by the buyer and not included in transaction value. Below that, point number 1, commission and brokerage, except buying commission. Commission and brokerage except buying commission. Commission and brokerage except buying commission. Examination, please keep in mind, this buying commission will be tested. Point number 2. Cost of containers. Cost of containers used as packing material. Cost of containers used as packing material. Cost of containers used as packing material. Then components slash material slash molds, tools, dies, components slash material slash molds slash tools, dies, given it free of cost. Given it free of cost. Given it free of cost. Next point. Design charges. Design charges, comma, engineering work, design charges, comma, engineering work, relevant for production of imported goods. Now, next point. Royalty slash technical fee. Royalty slash technical fee not included in transaction value. Royalty slash technical fee not included in transaction value. Not included in transaction value. Next bullet point. Payments made by the buyer. Payments made by the buyer on behalf of the seller. Payments made by the buyer on behalf of the seller to a third party. Now, whatever you have written down, students, please keep in mind, examination, these are the points which will be tested while calculating the transaction value as per section 14. They'll give you notes where they'll say royalty included, design charges paid by the buyer on behalf of the seller not included in transaction value. So you need to keep a watch for all information they have given, what needs to be added back, what needs to be deducted. I repeat, you need to keep a watch on the transaction value related information, what has to be added, when it has to be added. For benefit of doubt, now you can look at my screen. Now, in your institute material, rule number 10, they have clause A where they say costs incurred by the buyer but are not included. Now they say incurred by the buyer. Generally, like commission and brokerage except buying commission. This aspect of buying commission I have explained beginning of the session. Generally, any agent who has appointed overseas, who does this verification of quality or licensing with the seller, we call them as buying agents. And we pay no, this commission to them, which is called as a buying commission. And that commission is generally not to be forming part of my transaction. It should not form part of my transaction value. But what to be included? Commission and brokerage. Commission and brokerage. Now, this commission brokerage, which is paid to the seller's agent or to the agent overseas who are not connected with this buying, that needs to be added back. So, examination, a thin line of difference. For sure, this is one point which will be tested, because just to confuse you, to test your presence of mind, whether you are understanding commission, you are understanding brokerage, you are understanding buying commission, just to test your patient's presence of mind, this will be tested as one point. Then cost of container, which is treated as being one for customs purpose, and cost of packaging with labor. Now, these are two essential parts which are relevant for the material. Relevant for the material. I'll give a simple example for you to remember this expenses. Say you have this house shifting people. When we know in cities, when we want to shift our house from one place to another place, we have this agency called house shifting agency. So they will come with a truck. They will say that, sir, this is the material. For this material, I use the packing material. For this, I don't use any packing material. Now, at that point in time, for a moment, assuming that you have all this TV, refrigerator, washing machine, your cot, everything, whatever packing material is there, that was kept intact. You will say, Baba, do one thing. You reduce your value of service, because all this packing material I'll give you free of cost. One, I have readily available. Two, I have my own shop where all this packing material is available. So what we will do, I as a buyer, I have incurred the cost. So this cost, if it is not included in your transaction value, this rule 10 says that please add back that. This is with respect to point number A. Then point number B. The value apportioned as appropriate. Look at the language. They are using apportion as appropriate for the following services when supplied directly by the buyer, free of charge or at a reduced cost. I can give these items either FOC, free of charge, or at a concessional rate. Now, what could be those items? Could be raw materials. Point number one, raw material or material, component, parts, and similar items. Now, where do we find this kind of example? This kind of instances. Now, generally, like so there is a quality concern, saying that now in case of a battery, the car battery, what we see. So there is a lithium anode, which is the main ingredient. I don't want to compromise on that. I'll say that, look, whatever this battery you're manufacturing on job work basis, I give the lithium to you. Based on that, you manufacture my product. That could be one example. Second example, say in case of your apparels, the textile market. Take example of Arvind or various standard brands. They say that you do the stitching activity. I give you the shirt piece. I give you the buttons. Based on that, you cut, you apply your thread, you do the stitching. That would be one case. Or second case, where they'll say, you buy the shirt piece, you buy the thread, I give you the buttons, because these buttons are made specifically for, say, Raymonds. So Aravind Mills or Raymonds, they say that for this particular piece of shirt, buttons is something which I'll give you as a free of supply. Stitch that, send it back to me. Now, when you look at the final component which is coming in, those metals and components which are essential ingredients should also be taken into consideration. This is my first edition. Second edition, tools, dies, mold, and similar items, or jigs we call. Now, in manufacturing activity, I could either give it free of cost or at a reduced cost. So they've used a language called apportionment. That means to say anything which has given, which has got a life more than 1 year, whose cost is high. Then they say based on the number of productions or number of batches or any other parameter, there will be a unit of measurement how I do the apportionment of such particular cost. When you have read costing paper, you would have read this cost overhead allocation. Now, there could be different parameters how this cost overhead will be allocated in the process of your inventory valuation. Similarly, in the cases of manufacturing, there could be a scenario where the customer will give a tool, die, mold, jig, which is used in the production of the imported goods. So if it is given free of cost or reduced cost, they say, please jack up, please increase back that particular price. This is also getting added back. Third, materials consumed in the production of imported goods. Now, there's no much difference between this line and this line. Materials consumed in the production. Now, something which is maybe as a raw material form, maybe as a consumable form. Other than that, I don't see much difference. Point number 4, little important. Examination. This is one another area which will be tested most of the time. Engineering, development, design, art, sketches undertaken elsewhere other than in India necessary for the production. So wherever this engineering or design work is required, and this particular work was given free of cost or reduced cost to the manufacturer. Most of these tri-party agreements, we come across these valuation related aspects. Now, question here, sir, whatever we are learning as a theory, it is too technical. Will this help? Will this be come across in our career? Answer to this question, definitely yes. If you attempt or if you are made process of assessment, valuation, and customs. Whenever you deal with your customs officer or the process lead at the customs, you will come across these technicalities where there will be a 30 pages questionnaire given by the customs officer. I repeat, 30 pages questionnaire will be given, where they'll ask you, please tell me your business process. Please tell me what goods you are importing. What is the value addition you do? What is the HSN for purchases? What is the HSN for your finished product? Who is your supplier? Who is your customer? What is the relationship between your seller and you? What is the relation between you and your customer? Is there any relationship between your seller and customer? Is there any holding relationship, that is joint venture or investments by the seller in your company or your company in the customer or customer in the seller's company or any other third company in between three of you? Similarly, is there any agreement with respect to foreign technical know-how, royalty, design, your exchange of any goods? These are various questions, exhaustive questions they'll be asking you. That point in time, you will come across these aspects. Next question. Sir, if not, how do we get to know this information in my financial statements? You have this accounting standard 18, which deals with your related party transactions in notes to accounts. Generally, non-materialistic transactions will not be disclosed. But any materialistic transaction in relation to related party transaction, this gets reflected in your notes to accounts. Now, this is one of the information, or I would say this is a evidence for the proper officer, where he will say what goods have gone abroad, what price you have adopted. Now, if you remember your section 15 in your GST law, where they say in relation to related party transaction, you have to read rule number 30, read rule number 31. where they say cost of goods sold plus 10% is the minimum expectation with respect to the valuation in between related parties. Now, if this COGS plus 10% or services cost plus 10% is not maintained, then they say, I don't accept your transaction value. And this 10% is a benchmark even in your transfer pricing international transactions. So here, when I look into my books of accounts, you as an auditor, when you do your statutory audit, when you do your due diligence, when you do your internal audit, definitely take it from me. This is going to be a value add at the time of assessment. So you get into indirect tax practice, you get into due diligence, you get into this assessment provisions. That point in time, 100% you're going to come across these technical aspects. Moving further. Point number C. So you have said what was incurred by the buyer, which is to be incurred by the seller. I agree. You also given something called value of free supplies, where apportionment you have said. That also agree. What else? Then the next aspect called royalty and license fee. Most of these MNCs, where there is a parent company and sister concern, this royalty and technical fee is something which is generally there as per your service agreement, master service agreement, where buyer is agreed to pay at the time on the condition that the sale of goods being valued. Wherever there is a sale happening in the domestic tariff, on the basis of sale, I pay back royalty. So if this is not actually paid, not included, if this royalty is not included, for the purpose of landed cost, assessable value, I have to add back this royalty. This is my next point of addition. Next point, value of any parts or proceeds, any subsequent resale. Subsequent resale, then disposal, then usage. Now, these are, I call as a hidden conditions. Hidden terms and conditions. They say that I make a sale which is a conditional sale. What is the condition? Whenever you are making a resale of this commodity, you have to pay this much commission. When you are selling, when you are discarding this asset, this particular business, this is a commission you have to pay me. When you want to use these goods, this is the amount you have to pay me. So they say, whatever benefits which are accruing to the seller directly or indirectly, that is also amount which needs to be paid back to the transaction value. This clause number T is very, very technical. You and I, as a general layman, may not understand. But over a period of experience, over a period of handling assessments, this is something which we'll get to know how this is being dealt by way of a business transaction. Then last but not the least, all other payments actually made or to be made as a condition of sale. Look at the language, as a condition of sale. So when there is a sale, there is a condition. What? That the buyer has to pay to the seller, or buyer has to pay to a third party. For what? To satisfy an obligation. To satisfy an obligation. To the extent that such payments are not included in the price actually payable. Now, these examples, I'll just give you one example how we can understand this. Say, there's a exporter. This is XYZ INC. So this is in US. There is a importer, then Mr. A. This importer says, I need a particular machinery. There is a specific tailor-made machinery where the design is given by say Mrs. PTE Limited in Singapore. This is a design, and some portion of job work is required by Mrs. ABC Limited in say Japan. Now, this is a tailor-made contract where this machinery, what is being imported by A, is a tailor-made machinery where they say that the design for this machinery will be given by this entity called SSPT Limited. Job work means some portion of, say, 20% of the manufacturing process is dealt by ABC Limited. So XYZ Limited will procure services of PT Limited and ABC Limited. Now here, for a moment, assuming that the sale value is $150,000, design is say $2,500, job work is some 25,000, or let me make other figure, say $50,000. I'll say Singapore dollars. It's in Japan, right? So let me make dollars only. Say dollars. So here, this exporter XYZ INC says that 150,000 you please deposit to me directly. And this design charges A will pay directly to PT Limited, and this job work charges A will pay directly to ABC Limited. Now here, obligation of this exporter is being met directly by this importer. In this case, they say that whatever obligations are as per the condition of sale met by this A on behalf of XYZ INC, this should form part of my transaction value. This is what my clause D explains. So clause E explains. Clause E explains. Let me see if there are any doubts before we move further. I believe it is too technical. That's why no doubts are there so far. Coming back. Then they say that for the purpose of this transaction value under section 14, the value of imported goods shall be value of such goods and shall include. Now, this term, look at the weightage of the terminology. For the purpose of this section 14, the Customs Act, they say value of imported goods shall be value of such goods shall include. They have given a list. Now, this is an indication that the list which is going to be there, which is actually incurred, forming part. If not incurred, whatever presumptive value is there, that should be added back. What is that? Examination. This subsection, subrule 2, is something which will be tested for 2 marks in your examination. This is the subrule which is tested in your examination by and large. So here they're saying that your value, when you're doing a valuation, this has to include, what are those? Point number 1, cost of transportation, loading, unloading. Cost of transport, loading, unloading, handling charges associated with the delivery. So this is 1 point basic. Now, why is this included? Please remember the provisions of Accounting Standard 10. When you read property, plant, and equipment with respect to value, the cost of a machinery, they say that any cost of transportation, loading, unloading of incurred by the particular assessee for bringing the asset to its current workable condition. So any expenses incurred till such point in time, all this transportation, loading, unloading, handling have to be forming part of my cost as per property, plant, and equipment as per AS 10. So considering this particular provision, point number one, this I have to take into inclusion. Point number two, cost of insurance till the place of importation. Till the place of importation. Insurance is something which has to be taken. Why? Reference to AS 10 again. Without insurance, the goods cannot be lifted by any agent. This is a mandatory element of cost. So these two I borrow from accounting standard 10. However, now this is an assumption they are saying, where if this clause A is not available, they say, if I know the FOB value, and insurance, 20% of that will be my transportation. Alternatively, if I know FOB value and cost of transport, 1.2125% of that will be my insurance. So if you refer to your institute material, please refer to your institute material. They have given an explanation here. Further that way, FOB value of goods is not ascertainable, but the sum of FOB value and cost referred to in clause B, that is insurance, is ascertainable. The cost referred to A shall be 20% of such sum. Look at the next paragraph. Where cost referred to in clause B is not ascertainable, such cost shall be 1.125% of FOB value of the goods. 1.125% of FOB value of goods. So they have given a thumb rule. How do we find the transportation? How do we find cost of insurance? So they say clause A, the cost of transportation, loading, unloading, handling charges, etc. They say FOB value plus insurance, this into 20%. I'm going to get something called transport value. So what if insurance is missing? My insurance will be FOB value into 1.125%. Where the cost referred in clause B is not ascertainable, such cost shall be 1.125% of FOB value of goods. Let me see if there are any questions. Raman is asking this question. So what is the basis for this 20 and 1.125? Raman, this is a policy decision across the globe as a universal practice. Wherever transportation, this loading, unloading, etc. is not available, it's the thumb rule across the globe now. This is not specific to India as alone. So insurance and this transportation, etc. As a global practice, they say wherever we take these expenses, this is a practice prevalent. So answer, there's no means why this should be only 20%. Hope this is clear, Raman. Next. This is one another aspect where, again, like adjustments, what I was saying for 2 marks, this slide they are going to ask you. In case of goods imported by air, this is a catch point. Please write down. Please write down in your working notes. Please write down. When you write, students, you will never forget when you refer this particular point at the time of exams. Write down rule number 10 below that. Actually, you have written up to E. Below that, you can write down. In case of goods imported by air, the cost of transportation, comma, loading, unloading, and handling charges, cost of transportation, comma, loading, unloading, and handling charges shall not exceed 20% of FOB value. Shall not exceed 20% of FOB value. Now, the point what I made you to write is the point which will be tested for 1 mark in your examination. Students, please remember this ceiling, this is a cap of 20%. And this cap is applicable only in case of air, importation by air. In case if the goods are imported by sea or no sea, it is not applicable. So either generally when you will be tested for valuation, deriving the value of landed value for section 14, the goods will be imported either by vessel or by air. If the goods are imported by air, the cap for clause A, that is transportation, loading, unloading, is 20% of FOB. Please keep in mind, free on board, free on board. So what if I get something called CAF value? Examination, they value what they refer could be a CAF value, could be a FOB value. But this rule 10, sub rule 2, the value what we are referring is FOB value and not CAF value. Sir, how do we travel from CAF to FOB value? So when I get to know CAF value, from this deduct insurance, deduct freight. By doing so, what you get is called FOB value. Now, please keep in mind, examination, they always give you CAF value, and based on this, I deduct insurance and freight to land up in something called FOB value. So why do I calculate FOB value? Because whenever there is a transportation related expenses by air, this is a cap of 20% of FOB value. For this reason, I need to calculate my FOB value. So when you start your problem, step number 1, you will start with your value. This value you will declare whether it is at CIF or is it at FOB. Step number 2, adjustments for rule 10. When I say adjustments for rule 10, you remember the price actually incurred by the buyer on behalf of the seller, or royalty, design charges, any expenses paid to a third party on it at the instruction of a seller. All these adjustments as per rule 10 will be your step number 2. Step number 3, revised transaction value. Please write down whatever I'm writing here, step 1, step 2, step 3. For benefit, please make a note in your working notes. Step number 3, revised transaction value. What I will do, whatever is there in step 1, plus or minus as per step 2 will be adjusted to do the calculation of revised transaction value. Step number 4, computation of Forex. That means I translate the foreign currency into INR on the basis of the reference to rule section 46 or section 50, where when the bill of entry or shipping bill is presented, that will be taken into consideration for conversion of money into INR. Then step number 5, computation of duty. Computation of duty. Here I refer to section 15. You remember Mansi was asking one case law in the beginning of the class, Garden Silks Mill case. Where what is the rate of duty relevant? Is it the shipping bill date? Is it the bill of entry date? Is it the entry of the vessel into the customs place? Step number 6, computation of social welfare surcharge. Then step number 7, I do computation of IGST and cess if available. Step number 8, total customs duty plus taxes. This is your conclusion. This is your conclusion. In the process of this, students, you have to make reference to the notes, that is the provisions of section 14 read with rules. Examination. Sir, is it compulsory I have to quote rule 10, sub rule 1, sub rule 2, sub rule 3, or is it mandatory to quote rule number 3, etc.? 100% no. Don't be under the impression that only if I quote a rule, I'll get full marks. If you can quote that well and good. If not, you can say, as per the provisions of Customs Act 1962, read with valuation rules for import valuation. That is good enough. Please make a note of these points, students. All these points are relevant for valuation. Now, I'll take one example based on these particular provisions. Hope this is clear. Let me see if there are any doubts so far. Good. There are no doubts. Let me travel back. Yeah. So based on Rule 10, I'll take one example. Let me come to my Excel file. Please keep in mind, this is very, very important as per exam. Problem number 4. Problem number 4. Now, this problem number 4. From the given information, compute the customs duty and IGST payable. They have given amount in dollars. Point number 1, value of the goods imported on CAF basis. Value of goods imported on CAF basis, $5,600. Point number 2, insurance paid, $180. Point number 3, fill the place of importation, $1,300. Point number 4, cost of design paid by the importer included in CAF value, $450. Then, date of arrival of the aircraft, 15th June 21. Date of filing of bill of entry, 30th June 21. Now, why is the 2 dates are given for foreign currency? Converting the foreign currency into INR, my date of bill of entry is important. That is point number 1. Further, section 15. If you look at these two given examples, what should be the rate of duty? The day when the aircraft has arrived, the rate of duty is 12%. But when the bill of entry is filed, my rate of duty is 18%. Should I pay customs duty at the rate of 12%, or should I pay the customs duty at the rate of 18%? Answer for this, reference to section 15, filing of bill of entry or arrival of aircraft, whichever is later, that shall be taken into consideration. Here, filing of bill of entry has been done at a later point in time. Rate of duty happens to be 18%. Now, this I have given, just I'll read this. Now, looking at this information, please tell me, is this value 5,600? Can I take straight away, or do I need to make any adjustments? $5,600. Can I take that value and do the computation of duty, or should we need to make any adjustments? And is there any reference of adjustment as per Rule 10, Sub-Rule 2? Now, Rule 10, Sub-Rule 2, you have made a note just a while ago. Please tell me, adjustments as per Rule 10, Sub-Rule 2 required, yes or no? If you say yes, why? If you say no, why? I'll wait for your answers. I understand you have a practical issue. You have to look at YouTube and come back and do the entry. I'll wait for another 1 or 2 minutes. Please make your answers. Question number 1. Question number 1. Can I start my computation of value 5,600 and do additions and subtractions as per Rule 10, or should I need to make any adjustments? Question number 1. Question number 2. The adjustments of the freight as per Rule 10 Sub-Rule 2, is it required? Yes or no? In the given problem, freight payment was done for $1,300 US. My freight was paid for $1,300 US. Please give your answers. I'll wait for your answers. Very important one. Examination, please expect 4 marks question. Very, very important. Balaji says CAF is given, adjustment required. Very good, Balaji. Naveen says no adjustment is required. Naveen, please look carefully, ma. Very good. Very good. Srinivas says there is a adjustment required for CAF value. Okay. Okay. Good. Naveen says value of 1300 has to be revisited. Very good. All your answers. Good. Balaji, just have a relook at your point once again. When you say no adjustment required, why is it not required? Because this CAF is not relevant as per Rule 10. Whatever I made you to write down, please remember, I was always referring to FOB value. So here, what I will do, now, first and foremost, I need to know what is the FOB value of the given transaction. So why do I need to know FOB value? Because Rule 10, my adjustments of freight, loading, unloading, handling charges, everything is revolving on FOB value. So first, I'll say FOB value. 5,600 is the CAF minus insurance minus freight. How much do I get? $4,120. $4,120. What I have done? The cost of insurance, freight has been removed. Freight is having a 20% of FOB value. This is the cap. Now, please remember, the ceiling of 20% is only in relation to air freight. In the given example, they didn't say this freight charges are in relation to air freight. But in the given information, please look at the language. Date of arrival of aircraft. Date of arrival of aircraft. Now, this is a piece of information which is silent somewhere in the problem. Looking at this date of arrival of vessel or aircraft, we need to come into a conclusion that this freight charges, what was paid, was in relation to air cost. So here, what I will do, on FOB value 4,120, 20% is the cap as per Rule 10, sub-rule 2. Hope this is clear. Yes, Naveen, you are right now. Naveen has given the answer of 824. Absolutely correct. Then insurance, whatever actuals are there, I'll take that insurance into consideration. I'll take that insurance into consideration. Now, while taking this FOB value, question comes here. So what happens to the cost of design paid by the importer included in CAF? Now, this cost, what needs to be done? Cost of design paid by the importer included in CAF value. Now, if you refer to Rule 10, Sub-Rule 1, any design charges incurred by the importer not included in the CAF value, I have to add back. Now, because this is already included, it is pegged into 5,600. I'm not going to make any further adjustments to this 450. Hope this adjustment is clear, students. This 5,600, what was given, they say design charges incurred by the importer is included. So if you refer to Rule 10, Sub-Rule 1, if not included, that has to be added back. Because this is already included, I don't make any adjustments for that. Next, what is the conversion rate as per Rule 46? As per Rule 46, now, in the given problem, I have the rate of conversion $1 is equal to INR 78 on the date of arrival of aircraft. I have $1 equivalent to INR 76 the day I file my bill of entry. What should we take? What should I take? Should I take 76 rupees or should I take 78? Please give your answers. I'll wait for your answer. What should be the conversion rate I have to take for converting INR, foreign currency into INR. Naveen says 76. Raman says 76. Balaji also saying 76. Very good. So I'll take as per section 46, the day when I file my bill of entry, I'll say 76 is going to be my conversion rate. Now, 76 is going to be conversion rate. Now, what is the value for? Sorry. My conversion rate is 76 and my value will be FOB. Let me put the formula here in INR. My FOB value 4,120. To that freight 20%. To that insurance 180. Design I'm not adding again separately into G43. Sorry, I have to do H43. I repeat my answer. Please check your answer carefully. I have taken FOB value $4,120. I have taken freight $824. I have taken insurance $180. What would be your answer? Your answer will be $5,124 US dollars. Revised cost, revised value as per section 14. Revised value as per section 14 is $5,124 US dollars. $5,124 US dollars. Hope you all got this answer, ma. Then conversion rate. I have $78. I have $76. Please multiply 5,124 into 5,124 into 76. 5,124 into 76. Hope you got 389,424. 389 rupees 389,424. Hope everyone is with me. Till now, everyone is with me. Great. Mansa says 76. Yes, Mansa. Now, next question. Please refer to the given problem. They say the conversion, the day when the aircraft has landed, the rate of duty is 12%. The day when I filed my bill of entry, my rate of customs duty is 18%. Now, as an importer, should I pay customs duty of 12%? Should I pay customs duty of 18%? What would be your answer? What would be your answer? What would be your answer? Very true. Naveen says 18%. Raman says 18%. So here, I'll come back. Then I'll do my computation of, oh, this is already done. So, value for customs duty, I got to know. My basic customs duty happens to be on 389. I'll calculate 18% as my customs duty. 18% customs duty, 70096. Please do the calculation along with me. For the purpose of my customs duty, on 389, 18% is my customs duty. Then social welfare surcharge, like income tax surcharge is always on the income tax. So on 70,096, 10% happens to be my surcharge. Social welfare surcharge, 10% on 70096. On 70096, please calculate 10%. You're going to get 7010. 7010. Now, as per IGST, your Customs Tariff Act, the previous class, I have explained you Customs Tariff Act. There's a method of calculation under Section 3, subsection 8. As per this, my value for IGST purpose shall be the imported value, that is landed cost, plus customs duty of 70,000 plus the surcharge of 7010. All of you add along with me. 3,89,424 plus 70,096 plus surcharge, social welfare surcharge 7010. You will get an answer of 4,66,530. 4,66,530. Now on this, my IGST of 18%. This into 18%, 83,975. Everyone, do the calculation. 466,530 into 18%. You will get 83,975. 83,975. Yes, Pansa, you are right, ma. Reference to section 15, 18% is the rate of customs duty. Now, final answer: customs duty plus taxes. Customs duty plus taxes. So, as an importer, I have to pay basic customs duty 70,000. My social welfare surcharge 7010 plus IGST 83,975. I'll put a box for my final answer. Examination. Always put a circle or a box for your final answer. So you will get a final answer of 161,081. You will get a final answer of 161,081. Examination. You can expect this problem for 4 marks where you'll be asked to do calculation. That is first and foremost FOB value. Stepwise valuation, students. 1 mark is given for this FOB value. Then 1 mark is again allocated for this ceiling of 20%. Look at the problem. The freight was paid for 1,300. Since there is a cap of 20%, 824 happens to be the freight. Though the actual freight is paid more, reference to Rule 10, there is a capping of 10%, 20%. So I'll restrict to 824. Then this conversion, adoption of conversion rate, 1 mark is the weightage. Then adoption of customs duty 18%. For this, 1 mark. Then finally, computation of your this customs duty, 1 mark. Why you are adding back, why you are restricting to 20%? For explanation for this, 1 mark as a theory. This FOB value, you will say in your examination, when you are doing this answer as a note, you will say reference to Rule 10. If you don't remember sub-rule 1, sub-rule 2, don't worry. Everything you can just say as per the provisions of Rule 10 of Import Valuation Rules of Customs Act 1962. FOB value has to be taken into consideration for computation of the landed price and the adjustments of freight and insurance thereupon. So that is the starting point why you have set aside CAF value and you have come to your FOB value. Second point, you will say, as per the provisions of Rule 10, the freight, the air freight is capped at a ceiling of 20% on FOB value. This is a notes way for writing that simple English. You'll get another 1 mark. Total 6 marks is the weightage. This way, each step you have a allocation. I repeat once again, give utmost importance to your presentation in your examination. You know the value of every 1 mark in your examination. Student who scored 39, where I have to get a pass mark of 40. 1 mark is important. A student who scored 49, where I have to get an aggregate of 50, 1 mark is important. A student who scored 59 marks, where 60 is my exemption, value of 1 mark. So always know the value of that 1 mark and don't leave a room or scope for examiner to deduct 1 mark anywhere. Coming back. Declaration by a importer. This is a general declaration. I, as a importer, I'll say that whatever information the proper officer is going to ask, whatever information I feel the proper officer should have a knowledge with respect to fixing this value as per section 14, read with rules, I have obligation to fulfill. Now, when a proper officer sends a notice saying that, Praveen, please give me the master agreement for the prices which is there. I cannot say to the proper officer, you don't have a jurisdictional authority. I have been obligated as per Rule 11. Rule 11, the proper officer feels that he doesn't believe in your transaction value. Then he can reject your transaction value. He has the reasons to believe. What are the reasons? I'll write a letter. My dear officer, why you're not believing me? Why don't you trust me? What made you to believe that I am a default importer, or my price, what I have declared as per the self-assessment, you're not happy with? Whatever information you want, please let me know in writing. So based on the details asked by this proper officer, I'm going to go back for fixing of my determination of value. Now, this is the last line. We are at 8:56. We'll take another 2 to 3 minutes to wind up. Having read the rules with respect to imports, the mirror image of the same is there in my exports. To start with, Rule 2 has got the similar definitions what we have in my imports. So whatever this similar goods, identical goods are there, the same provisions are dealt with respect to my exports also. Next, with respect to determination of value. With respect to rule number 3, they say whatever transaction value is there, I determine that this is a transaction value, provided the seller and buyer, the exporter and the buyer in the overseas are not related, price is not influenced. If I can prove that price is not influenced, though related party transactions there, rule 3 will be accepted. So what if my rule 3, my particular proper officer says that there is an influence of a price? Then I'll go to my rule 4, where export by comparison process is adopted. So what happens here? The exporter, when he made exports, maybe at different quantities, maybe to different buyers, all these prices will be compared, will be taken into consideration, maybe at a commercial level, maybe at a quantity level, maybe in terms of distance or any other adjustments. By making all these references, value of comparison will be adopted. So what if I don't have any of such sales? Very simple computed value method. What happens here? What is your cost of production? What is the design cost? What is the profits to be included? Take all these 3 elements, just add. There is a questionnaire given by the proper officer. I give these values that will be taken into consideration by computed value method. Then residual method, best judgment, we can say. If the officer believes that he wanted to do best judgment, the principles available under rule 3, rule 4, rule 5. It's like a mixing. Like I put carrot, the cucumber, then beetroot, then pumpkin. I put all these, maybe little bit of jaggery or sugar. The output of that is a mixture where the generally accepted accounting principles governed with rule 4, rule 5, rule 6 will be taken into consideration by the proper officer under rule 7. Last but not the least, rejection. Similar to your imports, even exports, proper officer at times may reject your declared value. So why is that happening? If you remember, Customs Tariff Act, I have Schedule 1, Schedule 2. As per Schedule 2, I have to collect customs duty on exports where there is a value declared. So for the purpose of collecting the export duty, at times the proper officer may reject my transaction value. So students, with this, we come to the end of today's discussion. Hope you have understood and enjoyed the problems what we have discussed. The next class, 25th, we are going to meet. We will discuss more on a couple of procedural aspects where baggage provisions, where 3 marks question is tested in your final level. Till then, good night. See you all.